All right, here we go. Here we go. It is December 30th, 2022. It is the last day of trading for this year. It is the second to last day of this year. And in 2 more days, we will be in a brand new year. And that new year will be, make sure this focus is good, 2023. You got to make sure the focus is good because we're focused on 2023. Hello, everybody. How are you guys doing? Philip, what's up? Maro, what's up? Hakan, Lean, what's up? Morning, hoping Tesla drops for lower buys. It might just happen. Cameron, what's up? Joseph, what's up? Zocold, what's up? Sansky Rose, who's that guy on the wall that watches amid sleep? Wait, so did you guys like the thumbnail? Did you appreciate it? I hope you guys appreciate it. That's actually me. It's a picture of me that my mom put up. I don't even know why it's up. There's a baby picture of me put up as well. But there's a bunch of different pictures. Uriel, what's up? Jason, what's up? Kane, what's up? Thank you for being here. Jay Schwat, what's your New Year's Eve plans? To shave my beard live on this YouTube channel. Again, I still don't know if I should do it on New Year's Eve or January 1st. I want to do it on New Year's Eve, like 7 p.m., but I want there to be a decent amount of people that come, and I just hope people aren't that busy on New Year's Eve. So I'm going to ask on Twitter today if it should be January 1st and New Year's Eve. But it's coming off. The whole thing. It's coming off. The whole entire thing. You always skip me in hellos. Jellybee, I'm sorry. Hello. I didn't see you there. I'm sorry. Sasky Rose, what's up? Ray, Iceman, what's up? Nicola, NYE. Yeah, I'm thinking NYE too, man, because I'm not doing anything for NYE. And so the way for me to justify not doing anything is to shave the beard so that we have something interesting to do. All right. How is everyone feeling? We've got one more year. Nev, what's up? Quarantine Quartet, what's up? What's up, Amit? Thanks for the follow back on LinkedIn. Mike Surreal. Thank you for being here. Thank you for following me on LinkedIn as well. Jack to mid 2023. Is that even the plans other than shaving beard? Yes, bro. I'm going to get so healthy in 2023. So I was not healthy in 2022. I put on at least 20 pounds. I'm at 170 right now. I should be at 145. And I ate like shit. I ate so badly. Let me know in the chat if you ate badly this year. The reason I ate bad is because it was the first year of raising money for my startup, and the amount of meetings I was in and the amount of late nights I had. And I know that's not an excuse, but at some level, bro, it's just like you cannot focus on working out when you have 17 meetings in a week and you're trying to there's a lot of emotion, anxiety, pressure. There's just so much stuff, right? And that leads to bad eating. But we're kind of past that phase. There's different levels of pressure now. So I think I'll be able to manage. And, as a founder, to be honest, if you're trying to build a company, if you're not physically in the right shape, it's going to be hard to be mentally in the right shape, and it's going to be hard to just get things done. So bad eating is in the past in 2022. 2023, I'm not even going to try to eat out anymore. I'm genuinely not going to try to buy any fast food. I completely want to get rid of soda. I drank so much Coke in 2022. Imagine if I said snorted versus drank. I did so much Coke in 2022. It's a shame. We bought these 50 can Pepsi box, and I think I finished all 50 cans. And it's just I hate to say it, but that's what happened. Good morning, Amit. Ramu, good morning. David, are you guys on tonight? We are on SoFi Weekly and Palantir Weekly, 10 o'clock and 11 o'clock. Rush it. Good morning. 170 at 5'5". No, I'm about 5'8", 5'7.5". So if 5'5", 170 would be bad. 170 at 5'7", 5'8" is better, but it's not good. It's not good. Okay. And I know it's not good. So we're getting it down to 150. And here's the thing. I've lost weight 3 different times in my life. I went from 150 to 138. Then I went from 160 to 140. My back got really bad in 2021, so I wasn't able to work out at all, which is kind of the other reason why I gained a little weight in 2021. I could barely work out because I was in the chiropractor all the time. So I know how to lose weight pretty easily. I know how to manage my calories, and I've done it many times in my life. I just let myself go. So I think 2023, I will relatively get back probably within the next 6 months, maybe even earlier than that, to around the 150 range. And then I'm going to stabilize right around 145 and keep going from there. Greetings from Iceland. That's so awesome. Iceland, thank you for being here. We're going to get into the market in 1 second. Let me just open some comments. 50 cans in a year. No, this was 50 cans in like 2 months. It was bad. It was bad. The pilot Palantir and NHS was great news. Now they say all summer England hospitals will use and count Palantir. Yep, I did a video on that, David. We just got to wait to see if we get that deal. Paul, what's up? Word of the day. Yes, thank you. Okay. We'll be doing, guys. I learned so many words of the day yesterday because I was using them for a little skit thing that I'm doing and a bunch of different other pieces of content. So we'll do word of the day in a little bit. Community health challenge. Yeah, that's a good idea. Good idea. All right, let's go into the market, and we'll get back to the comments in a little bit. Tesla is down in the pre-market. Tesla is down in the pre-market. Or sorry, yes, it's down in the pre-market. It was up yesterday, 8% on the day, which is pretty good for Tesla shareholders. And people were asking, was that finally the bottom? It's so interesting what happens with Tesla, right? Like for the past 4 days, Monday through 3 days, Wednesday, everything was horrible, right? Everyone was crying. It was bad, blah, 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 blah. Like the sentiment that Ross Gerber was talking about Apple should buy. It's ridiculous, right? By the way, Ross, I don't think he's a real Tesla bull if he's talking about Apple should buy them. I mean, this guy is so emotional. It doesn't make any sense. And then they have one update. 8% days didn't happen until 2020. We don't get those days often. And it's like sentiment changes. It's like, well, they have FSD. Well, they have Optimus Bot. Well, they're going to solve everything. It's so interesting how the stock price changes the sentiment. And it's why most people suck at investing, including myself. It's that we are so naively attached to these emotions of numbers that the buy or sells happen like we are the algorithms, when we in fact should not be the algorithms. We in fact should have, actual investment theses. And that's why most fund managers can't beat the S&P, because they're emotional as well, because they have to sell Tesla because Tesla's going down. I mean, like, look at Chicken Genius. The dude was right about it, still bought Tesla, then took a loss. Now he bought back in, apparently on Twitter. He bought another 7.5% of his portfolio in Tesla because he's having FOMO for selling. When in reality, what if Tesla drops another 10% from here? Because the S&P has to go from 380 to 350 because the S&P is still trading at 20 times price to earnings, and the average should be 15. I mean, no one knows anything other than the long-term conviction you have around a company. And it doesn't seem like a lot of people in the Tesla community, or at least the people that I'm seeing, have these long-term convictions, or you think they have long-term convictions, because they're playing these emotional trading games. So it's interesting to see what's going to happen. We're going to see how the market reacts to it. This is the last day of trading. So, I mean, we will see if the market wants to give a little bit of love today, but obviously futures are negative, pre-market's negative. So might not happen. Palantir at 621. Spotify. Oh, I'm debating a Spotify bull. I found them on Twitter yesterday. This guy's really cool. He doesn't want to be on video, so it'll still be on YouTube, but it'll be like me with video, him without video. And he's super nice, super friendly, and he's bullish on Spotify. And so we're gonna have a little debate. I'm gonna ask him about his bull case. That'll probably be up next week. So excited for that, and we'll go deeper into that. Snapchat 881, Disney 8017. I'm also interviewing the CEO of Wejo. If you guys have a question for me to ask him, his stock is absolutely destroyed from $10 to 40. What's the max of this? Yeah, this was at 19 at one point. Now it's under $1. I can't ask him questions about the stock, but I can ask him questions about like maybe how he plans to turn this around. Even though I met him in person, I got invited to visit their franchise in Vegas. The company's phenomenal. I think they have a very great future. It's just hard for me to invest given the financials are not the best right now. But if you have any questions you would like me to ask him, let me know, and I can ask him. You can leave it as a comment on this video, and we'll ask him there. Amit, as an investor, how many years do you think it will take you to reach the returns of the S&P 500? Well, so the S&P reaches what, 8% year on average? I mean, if Palantir's at $6, let's say your average is $6 for Palantir. If Palantir gets to $20, which is like a 3x from here in 4 years, then you beat the S&P, right? Like, so an 8%. My point is, if you invest in an individual equity that can 1x or 2x within 2 to 3 years, or even 5 years, well, what, 8? Like, if it 1x's over a decade, you beat the S&P, right? Or you match the S&P. So lower than a decade, probably 8 years. I think there's obviously individual equities that will 1x or 2x from this level. I mean, this is the level. And I'm not saying this. I listened to a lot of people on Twitter yesterday that I respect very deeply, that have made generational wealth from here. People like Sean from Invest to Live. I know you guys, he's a friend of the channel. He was talking to me and he said he made generational wealth in 2001 and then made generational wealth again in 2008. So his argument was like, it's not that scary. You just invest in the winners. Now, the winners are a little bit hard to identify, but I think there are some obvious winners. SoFi and Palantir and Tesla, I think there's some of those obvious winners. But you invest in the winners, you're patient, you buy them at dirt cheap prices, and then you wait and you make some fucking money. Like, so if that's the case, and we have this opportunity, I think we can all beat the S&P within the next 5-6 years. The question is just which stocks do we buy, and will those stocks actually execute? So Sean is 2 generations of wealth. Yeah, Sean has some good money from what I know. Jellyby says this is not dirt cheap. That's where we have a market of winner and loser. Some people think Tesla's dirt cheap. Some people think Tesla has another $100 billion to fall because they're just a car company. Someone has to be right. All right, this is the last Cowbell of 2022. I appreciate everyone who has been here the entire year. It means the absolute world to me. 170 people in the chat. Thank you guys for being here. Last Cowbell 2022. I will see you all in 2023 when we ring the cowbell again. 9:30. The stock market is now open. Wake your ass up for the final time of 2022. Here we go. Tesla down 1.18%, $120.54 right now. Coca-Cola 63, Pepsi 181, Exxon Mobil at 108. Apple not being able to move past 130, 128. A lot of people are thinking, including an investment banker I talked to last night, that Apple is the next stock to fall. It hasn't really fallen compared to some of the other big guys like Meta and Google and obviously Tesla, Palantir. People are thinking Apple is the next big tech one to fall. Meta is holding up very well at 118 versus 120. I mean, Meta went to a low of like 114, 115. Obviously, the low on October 13th was 88. Now it's up 30% at 118. So if you bought at 88, which quite frankly, looking back on it, and I know hindsight is 2020, and I've been bullish on Meta for a while. I don't know why I didn't pull the trigger, but $88 for a company that has 3 billion users was a fucking joke. I mean, this was just absolutely insane. And I think I let my bearishness get the best of me at the time, because that was a time to really make like for me, a big move would have been a $5,000 position at them. I could have afforded that, and that would have been one where it's like absolutely risk reward asymmetrical to the risk or to the reward being better than the risk. And that should have been a moment to me. And I missed that one. And I'm a little bit annoyed about that. I don't think 118 is that same moment where now obviously long-term it's them, but 88 is not even long-term. 88 was like, now granted at 88, we were like, is this MySpace? Is this Yahoo? And that's the problem with emotional investing. Because if you have a thesis on Meta, 88 is insane. But if you're like, well, what if it's the next Yahoo? It's the next MySpace because of all the bearish nonsense versus the fact that they put up $28 billion in like Yahoo's not putting up $28 billion per quarter. It makes you wonder a lot more about, just being able to pull the trigger on your conviction. So Meta is holding up phenomenally well. I want to get Meta at 105. We'll see if it drops there. Google at 87, Amazon at 82. Amazon's had a hell of a decline. Amazon's been tough. I don't want to buy Amazon because AWS is cool, but the retail business sucks, and I'm not going to bet on AWS as like the growth sector over the next 10 years. I think they have to show me some more. Snowflake at 140. Path. Let's go to NVIDIA. Is NVIDIA still at 140? 142. Okay. So NVIDIA's at 142 right now. Rocket Lab, $3.60. AMD, what do we have on AMD? AMD is 63.58. Okay, so semis are both down a little bit, but still relatively flat over the year. Let's look at Bitcoin. I feel like I haven't pulled up Bitcoin this entire week. Bitcoin is $16,460. This is stupendous. If you don't know what stupendous means, it's the word of the day. And stupendous means extremely enthusiastic. I'm extremely excited. So maybe I used it wrong in the sentence, to be honest. But I am stupendous around Bitcoin's price. Being at $16,470, it makes me stupendous because it's, Bitcoin hasn't fallen below 16, hasn't reached lows of 15, hasn't gotten past 17. It's kind of just been stuck in this channel. And I guess we will see how Bitcoin turns out in the near future. PMI data from Chicago Fed released in 15 minutes. Okay, very cool. If someone has that, can you please send the link as soon as it's released? We'll go over it together. They use this word in WWE. Oh, okay, good. I used to be such a big WWE fan. I haven't watched it in so long, but I used to love the WWE. What was the one thing I wanted to talk about? Oh, yes, Kathy. So let's look at some of Kathy's buys and what ARK has been buying over the past, or basically yesterday. She's bought some interesting stocks. Let me just pull them up and then we'll go to them on Webull. Kathy bought ARK. So Kathy, well, first of all, look at this, okay? Either she's right about this company or she's wrong, but she has some level of conviction. She bought 3.7 million shares yesterday. Not of Tesla, not of Roku, not of Teladoc, not of Zoom, not of Coinbase, not of Roblox, not of DraftKings. Of Ginkgo Bioworks. So this is a company I talked about a couple months ago. I do not have a position yet. Well, no, I do. I have 100 shares because I got assigned from a put. I sold my position at 292 because I saw the macro getting really bad, at least in the biotech's been hurt even more than some of the other stocks just because it's more, risky. And Kathy has tripled down on this conviction. And I'm still trying to analyze this. I mean, look, I really love Ginkgo's long-term potential. I think Kathy is seeing this as like this AWS of genomics that is going to absolutely change everything. They did a $100 million share offering the other day, or like a month ago. Q3 wasn't that good, but Kathy still seems convinced. And I mean, Ginkgo's at like what, 160 now, 170. The risk reward seems high on it, but the valuation is still a little rich at a $3 billion. I'm afraid of them falling below $1 if the S&P gets down to around 3,400, and then they might have to do a reverse split because they might get delisted. So that's what I'm waiting for. I'm holding off a little bit before I re-enter that position, just trying to understand them a little bit more. And then she bought some more Tesla, 22,000 shares. I have a position in DNA. Yes, Glitch Life. We know you have a position in DNA. You're the one who introduced me to DNA. I think you knew I sold out at 292 because I was just like, I don't trust this macro right now. But Kathy is doubling down. Amit's ability to use the wrong definition for words is stupendous. See, we learn from my mistakes. It gives you guys knowledge. Roku, she bought 32,000 shares. Look at what she sold. She sold Zillow. I thought she got rid of this position, but she did not sell this position. This position is still there at a $319,000. By the way, I didn't tweet that I'm live, so I'm going to really quickly put the link on Twitter just so people know that I am live right now. Live market open. Okay, and then what's the other thing she bought? Then she bought some DraftKings, which is interesting. DraftKings, I don't know why she's bullish on that company. It's not interesting to me. And then she bought some CRISPR and Teladoc. So the genomic stocks are really popular to ARK apparently. She has CRISPR, Beam, and Pacific something, Pac B. That's the let's actually look at those real quick. We never look at genomic stocks, and I actually do know a decent, I don't want to say decent, but I've been studying them more. Pacific Biosec. Let's look at some of these stocks. So this one was at 53, now it's at 8. Okay, this is the main Kathy holding Pacific Biosciences. Let's look at CRISPR. CRISPR's at 39. It was at 1.220 in 2021. Now it's at 39. And then I think she has Beam Therapeutics. I don't make any content around. There's a guy called Hassan in investing. He's actually on Audia as well, and he makes a lot of content on genomic stocks. I should have him on for an interview one day and just talk to him a little bit more. 138, and now it's at 38. So genomic stocks have also fallen off, and then obviously we have Ginkgo. That it's like it seems she has more than 120 million shares right now. It's at 167, and it was at one point, $20, $13. What was the max on Ginkgo? The max on Ginkgo was 15. Okay, 15, and it was at a 21 billion market cap when that happened. So, I mean, her conviction on genomics is there, but, it's obviously just not in the right space, especially given what's going on with the macro. Bacon is stupid. I mean, stupendous. Why does he keep buying Roku? I did a video on this a couple of days ago, why I think Kathy's Roku thesis is flawed. And even if it's right, maybe you get a 1x or 2x from here. I don't think you get back to 400. So I'm not a fan of Roku, to be honest. Thanks for all your hard work, Amit. Let's end it to begin 2023. I love it. Let's end it to begin it. It's going to be really, really fun. You stopped talking about DNA. I stopped talking about DNA because I don't have a position in them anymore, and there's not much to talk about. They're a biotech. I laid out my thesis in like 5-6 videos. There's not that much news, and the company doesn't do anything until they get new programs, right? So it's like, it's not that exciting of a company to cover. It's an exciting company, but there's just not that much content to make about it. And until they get a little bit more momentum, Q3 earnings, I think you'll agree with me, Matt, kind of sucked. We're not going to really see too much. Amit, what's your Instagram at? Okay, my Instagram at is at it's Amit Kukreja. I am starting to post again on Instagram January 2nd on Monday. Haven't posted in about a month. I've been focused on a lot of other stuff, but Instagram is really where I promote more of my startups. If you guys want to follow me there, at it's Amit Kukreja is the handle. Okay, let's get into some of the talking heads on CNBC, see what they are talking about as well. Now, one thing that's interesting is some of the stuff that Elon Musk has been tweeting. Obviously, it's very interesting as well. Dan Ives, let me show this before I pull up CNBC. Dan Ives issued a letter yesterday, okay? And this letter was a 10-step plan to save Tesla. We went over it on the Daily Cowbell that's going to come out in about an hour. And it's Dan Ives, if you don't know, one of the biggest Tesla bulls, main proponent of it. Here's his plan, if you guys see it right here. He has a plan. I have a TikTok as well. It's the same name, at it's Amit Kukreja. I believe it's the same name. If it's not, let me know. But if you type in my name, it'll probably pop up. 10 actions Musk needs to do at Tesla Twitter in 2023. So some of these are good, some of these are not, right? So like one of the things that I think is horrible is number 6, right? Board of directors changes with some more experience around tech and EV leadership. Imagine if Ross Gerber was on the board of Tesla. One day, this guy's like Elon to the moon. He's kissing his ass in the Twitter spaces, like literally, like just so happy to talk to him. The next day, saying that Apple should buy Tesla. I mean, to have that level of emotional instability on your board of directors is absolutely insane. So I don't think number 6 is a good idea. Number 5 is great. Announced Cybertruck deliveries will hit the road by 2023. That's a good idea, right? We should probably announce that. Get a CEO for Twitter. I mean, I think that's good by the end of January. Might be a little bit difficult, but I think it's possible. And then number 9, I think is his best suggestion. The more political on Twitter that Musk becomes is a bad thing for selling EV cars. I don't know if it's a bad thing for selling EV cars. I just think it's a bad thing for the brand of Tesla. I think Elon Musk is at that point in his life, however, where he's like 50 years old. He's done everything a human could possibly do. He wants to do, 1 trillion years more worth of stuff in the next 50 years of his lifetime, where he's gotten to the point where he genuinely does not give a flying you-know-what about what other people think. And I kind of respect that. Now, will that hurt the brand and the stock in the short term? Yes, but if Tesla sells 10 million cars, 5 million cars, is Twitter going to hurt anything about Tesla? And I think the answer is no, right? The answer is just no. So if that's the case, I think Musk is really comfortable in his skin. He does not care. And I don't know how much of him being political will hurt the brand. Granted, for most investors, they would like him to probably stop being as political as he is. So those were some interesting suggestions by Dan Ives. And we went over it on the Daily Capital. Let's take a look at this. 2 Tesla watchers weigh in on the road ahead for the company and what they should be doing going forward. Pulling it up. Here we go.
2022 saw a lot of shareholder wealth destruction for Tesla. Is this the thing that we can expect in 2023, or can it find a bottom?
Well, it's hard to say if it could go any further down. I mean, it's been a horrible season for Tesla. But when you look ahead to the year in 2023, there are some positive signs. They got the Cybertruck coming out. There's market rumors of refreshes to the Model 3, the Model Y. That could excite buyers. But the real question will be, where are interest rates? Where's the economy in general? Are we in a recession? Where is the buyer's mindset? So those are the things I think investors are really wondering about Tesla going forward. Yes, Tesla, Twitter, Elon Musk, there's these distractions, but this is a growth stock story. And if the growth can continue, then people are going to be excited again.
It's interesting here as we look at this word, George, this idea that now Tesla is almost being talked about in multiple circles now as more of a traditional type car company, right? We're talking about the same kinds of secular issues, fundamentals that we would for, say, a Ford or GM. Is it fair to characterize Tesla as more of a mature auto company these days?
No, I mean, that's not the way we look at the company. We value it relative to traditional growth stocks. I mean, the large cap, whether it's Apple or Alphabet or Meta and Nvidia. And if you look to next year, even though there's a lot of uncertainty around the earnings there, or even out to 2025, Tesla is incredibly compelling on just a PE basis, in particular in the light of the growth that they have. We think next year, maybe a little bit slower, but after that, this is a 30 to 50% growth company for years to come. And it's very, very compelling on traditional metrics like PEs and growth. So we're very bullish on the long term. And look, the near term sounds bad. I mean, there's been multiple data points indicating that EV sales in the US are weak, in China are weak, in Europe are weak. They're weak everywhere. And we wrote a note last week about Elon Musk being on Twitter Spaces, basically saying the same thing. So it's not that much of a surprise the stock has been weak lately. Frankly, it's a surprise how weak it's been.
So, George, if I could just follow up on that. You speak of the valuation that it should have relative to the other growth parts of the market. You look at a stock, say like Apple, mega cap technology, that trades at roughly 21, 22 times forward earnings right now. But
okay, let me interrupt this real quick. We are getting a call by a certain person. Yo, I'm on stream.
I have some good news. Got my account back.
Okay, very cool. Your account is not hacked anymore.
No, but here's the crazy part. My Google account is back, which means I can access my email. But My YouTube channel is now suspended, like the second one, because of violation of terms of service.
That's well, now
It's kinda
262 people know that your thing is suspended.
No, but I wasn't the one who violating it was the hackers. But here's the crazy scoop. Now I know how the hackers got through my two-factor authentication. So I saw the whole thing play out back, like reading it forensically. So all of a sudden I see an email on Christmas Day. Dear Tom, we know how important your files to you. It sucks that you lost their access to your account. Here's the access to your account. So the Google literally gave them my account, bro. They
Wow.
filed a recovery request, and Google gave them my account within 10 minutes.
This is why ChatGPT is going to beat these motherfuckers.
Bro, this
That's
is a
hilarious.
multi-billion-dollar operation. It's like, here's Tom's channel, guys. Enjoy. What the fuck? Bro, it literally took 10 minutes. Like, nobody called me, nobody texted me, I got no emails, not, boom, boom, boom.
There's nothing
it's
there's
gone.
nothing you could have done, basically. You know.
No. And it took them 5 days to give me back my channel, and they basically scratched my YouTube channel. It sucks because that channel was popping. You know this. Anyways, I wanted to let you know that I'm back, and I'm back better than ever.
Okay, very cool. All right, so your channel's good. Channel's back.
How's the market this morning?
Well, the market is the market. It's the last day of trading 2023 or 2022, and it's down. Tesla's down, but not down horribly. So, you know, it is what
Well,
it
we
is.
expected this. We talked about it on Cowbell today. What's the future for Tesla?
We
As
did.
much as we expected.
We did. I'm watching two people on CNBC right now talk about the bull and bear case of Tesla as well. So,
Yeah, I think it's obvious that this is not the start of a new run. We had a little taste of what good times used to be, but now we're back in the trenches.
yeah.
But I think, honestly, Tesla bulls, long-term bulls, should not mind. In fact, they should be happy about it.
Yeah, no, and that's what most of my chat is saying as well. They're like, at the end of the day, they don't really care because they're long Tesla.
You get to buy cheaper Tesla stock.
Yeah.
For at least a year. And there's no urgency. Peter Lynch, one of the greatest investors of all time, he gave multiple examples of there's always plenty of time to invest in good companies. It takes years for them to develop. He gave a few examples. You could invest into Apple 10 years after the IPO and still made hundreds of percent. Like the long term, there's always time to get in.
Yeah.
And nothing is instantaneous. Just people got used to the quick 2020 hyperbolic, here's 5,000% on your new NFT bullshit scam kind of percentages. But those days are gone.
Yeah. I agree. We are going to see what happens. And we talked about it on Daily Cowbell, which comes out in like an
So
hour.
Daily Cowbell comes out right after your stream?
Yep. Should be right about after, or 10:30,
Amazing.
10:30 roundabout. Yeah.
Amazing. So have a great morning, everybody. I'm going to go celebrate the unhacking of my account.
All right. Talk to you later.
Okay, man. Just the two of us.
We got to play that song.
Okay, later.
Bye.
Bye.
All right. Going to go back and play this right now.
But then you also mentioned Meta Platforms, which trades at closer to 10 to 12 times forward earnings. These are growth. I mean, the whole growth sector has been upended because of rates. Why should Tesla be spared that? Could there be more downside if those rate concerns are still there?
Right. Well, it hasn't been spared that, right? It's gotten lumped into those stocks over the last month and the last quarter and the last year. But our point is that if you look at what the consensus, we don't cover those other growth stocks, but we look at the consensus estimates, and Tesla's growth dwarfs that group. And we lump in several, whether it's Meta, Apple, Amazon, Nvidia. Tesla's just far and away the fastest growth company in that group next year and for years to come. So that's where we get excited about the stock relative to those.
I mean, Tim, this is a compelling story. If you wanted a blue chip, if there was a blue chip in what you would characterize as a relatively emerging industry like electric vehicles, Tesla would have to be it. I mean, it has the first mover advantage. It's the biggest brand name there. What is to say that a 2/3 decline in market value isn't enough for them to have a positive story in 2023? And if so, the driving headlines will be what, Tiggins, in the news headlines?
Well, that's the gamble, right? And the headlines probably driving that will be the return to kind of massive sales growth. That's what investors have been excited about over the last few years. And the other thing we're kind of forgetting here is just the Elon Musk premium in the stock. if his attention turns back to the company, that will excite a certain segment of the market who are nervous that he's distracted over at Twitter and, are really kind of buying into the stock with that hope and excitement for the vision of the future of the car that he's been selling.
Okay. And George, I'll give the final word to you here. If you look at it, we know you have a buy rating on the stock. You're bullish on it. What could be the thing that puts a bear case scenario in place for you for Tesla in 2023?
There are a few. Tim alluded to a couple. It's the Cybertruck coming in the second half of the year. It's hopefully China rebounding and getting over its COVID issues, and the U.S. starting to get back on a strong footing based on an Inflation Reduction Act incentives that we'll see starting to kick in January. So I think it's those three things that really help sentiment in 2023.
Sorry, guys, the button wasn't pressing. The interesting thing is this $7,500 EV tax credit is starting to take effect, and I personally did not really know how big of a deal that is, but the more I'm reading about it, it's a decent incentive, especially for people who can already afford a Tesla. Like if they're not going to be that affected by the macro recession, getting $7,500 off is not bad. I mean, it's actually it's a pretty good deal. So that might actually be a super big catalyst as well. Obviously, the bear case exists if a recession gets really, really bad. Again, I'm going to echo one of the things I said yesterday. One of the reasons the financial markets have not collapsed as badly as what we saw in 2008, as we go to end phase, and we'll talk about them, is because people still trust the economy. And 2008, people didn't trust the economy. It's like there's still trust that the economy is stable, that it's a global thing, that it works, that people can get jobs, that it's not screwed, it's not rigged in terms of the favor of just the rich. Like there is faith that the economy is not this pile of crap. And I think once that faith goes away, and that might happen as more unemployment rises and people start feeling like, hey, this is not fair, then we may get to a little bit more lack of trust, which leads to more liquidity and people wanting to reserve their assets. But I think people still trust that the economy is going to be okay. Now, what doesn't help trust is when insiders sell shares, and Enphase has been doing that a lot. I got to give credit to Gabe on this. He was calling a short on this bad boy at 300 or 315 or whatever the heck it was. And I mean, yeah, it made sense to buy puts at that time. Like it really, or 339. What was it at? Yeah, it was at 339 pretty recently. Let me go to the 3 months. Yeah, it was at 339 on December 5th. Now it's at 260. So if we do some quick maths, 339 divided by 260, it has gone down 30%. So you would be up 30% on some puts if you bought it at that time. And on December 5th, I remember we did a Financial Junkies podcast, and Vitaly, who's a big Enphase bull, he's made a lot of money off of it. He said, he wouldn't buy it right now, but he also wouldn't short it. Well, if you shorted it, you would be making some money. You would definitely be making some money. Yep, I left all my Enphase, but I sold my holdings at 300. Yeah, some stocks is just like, this is what I do with DNA, right? I love DNA, but I had to sell it at 290. It's like, it just didn't make sense. Enphase was bound to go down to 260. Like whoever was buying it at 330, like I don't know what institutions or individual investors were actually buying this at 330, at $340 on December 5th. I mean, that's like paying $250 for Meta or something. It's like, there's a reason the stock is not at $250. Speaking of Meta, by the way, let's take a look at some analysis on how investors are thinking of the metaverse and how patient they actually need to be in order to keep going.
And this might surprise people, but I'm bullish on the metaverse. Look at what we're doing right now. We've practically built a metaverse to talk to you guys. This is the future. I just don't know how you monetize it right now.
Yeah, look, I think it's fair to say that the metaverse is at best under construction and sales were weak this year. But I think that's also a hardware story, right? The price of the main Oculus headset went up this year, which is very rare for any kind of gaming console. And that MetaQuest Pro was just really, really expensive. So I think the real moment to judge the metaverse is going to be at the end of next year, once those headsets from Sony and Apple have come out and Meta has had a little bit more time to do its thing.
I do feel bad for our listeners, not viewers, because if you were viewing, you know that we're coming to you live from the set of Tron 3, apparently, which I just dated myself. But I'll date myself again, Casey. And I love Steve's reference about video games because the current metaverse looks like Tecmo Bowl, right? Blocky figures. It's like a real life, But I'm thinking, to your point, Kelly, in 10 years, 15 years, it might be Ready Player One. It might look like this.
For conference calls.
Is it going to get like that? And if so, when?
Well, look, I think that what we need to see is a lot of technological advancement on the hardware side. There is just a lot of tech that needs to be first built, and then it needs to be miniaturized, right? It's hard to shrink those batteries down that much. It's hard to make a headset that won't overheat. And then once you've done all of that, you need to make it cheap enough to get into a consumer's hands. So, if you believe in Moore's law and the basic idea of technological progress, I do think within 10 years, we're going to be a lot closer to that vision, but it's going to be a long wait. And I'm not sure how patient Meta investors in particular are going to be.
And Steve, we talk about Meta because they called themselves that, but are there any more under the radar metaverse companies that you think could be the real players in this space, kind of the picks and shovels analogy to the gold rush type thing?
Yeah, I mean, we've been talking about this since this whole concept come out. NVIDIA might be a beneficiary of the metaverse, cloud companies, AWS, and so on and so forth. But look, to Casey's point, what he was just saying, the technology is not there yet. And that's true. None of these companies have really invented it yet. But what we got to keep in mind is, as we keep talking about these 10-year, 15-year horizons, these companies are selling this stuff now. Investors need to see results now. And
again, I don't care about the metaverse. I care about how much advertising can Meta do. And I really do not care about the metaverse. I care about the advert. I haven't invested yet, but I would not be investing in Meta for the metaverse. That would be icing on top. I just think their growth in terms of being undervalued for the levels of revenue they put up and for having 3 billion people's attention is probably underrated. All right, a couple of tweets I want to go through. Palantir, I tweeted this yesterday, should be reaching out to ticker symbol LUV, which is Southwest Airlines, and do for them what they are helping other major airlines like United Airlines do. Operationalizing data could have potentially have made the holidays a lot more happier for people traveling. If I was CEO Alex Karp right now, I would be doing everything in my power to get on the phone with the CEO of Southwest Airlines. For those that don't know, the holidays got ruined for a lot of people because of a major amounts of canceled flights. And it wasn't just the weather. Apparently, it was just the bad management, the bad organization of data from Southwest Airlines. United Airlines, we know, is using Palantir. Palantir obviously built Skynet, which was in collaboration with Airbus, which is basically like a operating system for the sky. Very similar to some of the other sort of vertical platforms they built, like for Hyundai Heavy Industries in South Korea for shipyards. So I think Palantir should 1000% get on a call with Southwest and tell them that their organization of data sucks. They're not operationalizing it. They could have avoided a lot of bad things over the holidays, and that this should not happen the next time there's bad weather. So if I was Palantir right now, that would be the next client on the block for me. Because if they had Palantir, I think that might not happen. And that's the value of Palantir. It's like, if that doesn't happen, the catastrophe that happened over December, if you have a software, how much money does that save you? How much brand reputation does that save you? And how much time and efficiency does that save you in terms of being able to be a better company at the end of the day? And if that's the way the world is going, if every other airline is going to be using something like a Foundry, you got to hop on board, right? You can't be selling on brick and mortar forever. You got to embrace e-commerce. SoFi also has increased their average APY to 3.7%. Which is pretty cool, right? SoFi now we have an average APY of 3.75%. Now Robinhood is still offering 4% APY, but SoFi initially did it at 3, then 3.25, now 3.75. They're obviously trying to get people locked in, get more direct deposits, and if they're able to do that, then they will be able to continue. Now, final tweet I wanted to show before we get back into some of the charts. This is a real McDonald's ad that I saw yesterday. If you guys see it right here, let me zoom out a little bit. It was on Instagram stories. They have a hypnosis like creative, and they're saying you are getting very hungry. That is that's an interesting ad. I see you guys in the chat talking about Meet Kevin. Let's go to his PP, which is his ETF, and let's take a look at how it's doing right now. So the Meet Kevin Pricing Power ETF, I think it debuted at like $19 or $21, something like that. Yeah, $20, ran to 24, and now it's at 17.45 right now. Again, this was expected. The top holdings in this ETF are Enphase, Tesla. I think Lululemon is there. Apple is there. It's not that innovative of an ETF. It's pretty basic in terms of some of the stuff that Meet Kevin has cared about. So this is that's why Meat Kevin's PP is not doing that well right now. I actually got this ad, but a McNugget one. See, it's hilarious, bro. It's the ads that McDonald's is serving is pretty damn funny. Pretty hilarious. Yeah, but Meat Kevin bought it in start of 2022, down since 70% of that. Well, so interesting. I don't know if Meat Kevin if he transferred the stocks that he bought in the start into his ETF, or he bought them recently. You might be right that he just transferred them since the ones he made in the beginning of the year. Which, if that's the case, then yeah, he is probably down. His PP is soft and flaccid. Yeah, it's probably it's not the highest right now. Let's take a look at some of these other stocks. Enphase at 261, Ginkgo up a little bit at 17. Tesla. So Tesla's up. It was down a little bit as soon as the market opened, down at 0.90 or down at 119. Now it's up at 123. If Tesla did bottom at 108 and we are continuing to move forward, then that's obviously good news going into 2023. I think the question is, how long does it take for Tesla to get back to a $400 stock, which is $1 trillion market cap, or even a $250 stock, which would be about $700 billion of market cap? It might take another 2 years. It might take another year. It might take a long time for that to happen. Or, if interest rates start to go down because inflation dramatically starts to decline and deflation happens, if you're in the Cathie Wood camp, then it might happen sooner than we think. We know Tesla is able to run when it runs. Like, Tesla's one of the stocks that's like, when it's time to run, it runs because retail gets involved, crowd psychology turns really bullish. Tesla, the best company in the world, starts becoming echoed every single second if you're in the financial world. So Tesla has the ability to do what we've seen it be able to do. The question is just if it's gonna get there. Uber at $24, Spotify 77, SoFi up about 0.76% at 46. Mercado Libre, Melli is a stock I've been learning a lot more about. I know it looks pricey right here at $840, $42 billion market cap. What I've been told is that they're the Amazon of Latin America or of South America. And it's a more interesting company the more that I look into them and kind of see what they are trying to do. He's selling Tesla. Do you think he's selling Tesla? He's been talking crap about Tesla. I don't know if he's actually selling Tesla. Oh, he sold everything? Oh, so he bought over again, right? In the recent time when he launched the ETF. That might be happening. Melli is a monster. They are literally everywhere in Latin America. Yeah, that's why I've been looking into them more. I've been trying to do more research on Melli. Obviously, a stock that's $842, you're like, do I want to pay that? Even though that has no relevance of like what you're buying just because the price is high, right? They could have done a split and the price could be lower. So that's just pure psychology stuff. But I am trying to go deeper in terms of understanding if the market cap is justified. Someone said right here, what did they say? Oh, word of the day, Massachusetts. You're doing this to mess with me, and that's mean, Fadian. You know I can't say Massachusetts, so you're doing it to mess with me. Taiwan semis at 74, Shopify 34. Let's go to Rumble. Where is it? Rumble's at $6. Okay, if you guys don't know what Rumble is, they're a conservative YouTube competitor. In fact, Andrew Tate, I don't know if you guys are keeping up with this, but he went to jail recently, then he got out of prison. It's been a whole whirlwind over the past couple of hours, really. Rumble paid Andrew Tate, I think, a lot of money to be on their platform. And the stock, this is a stock that Peter Thiel invested in. It debuted at around 10, ran up to 18. I personally said I wasn't buying this stock because, a conservative YouTube is a decent idea, but I don't know how big that could potentially be. I think they have like 97 million MAUs, which is great, but I just don't know what's the bull case on a conservative YouTube, right? Now, they wouldn't say they're a conservative YouTube, but if you go to their homepage, it's a lot of more conservative stuff. And they're at 585 right now. They got to a low. They're at $6 right now. Market cap is $2 billion. Bit expensive for a company that did $11 million in revenue last quarter. Unless you believe that YouTube is going to censor so many people and that Rumble is going to be the only destination for them. It's not. And also video discovery on Rumble kind of sucks. I was thinking, should I put my content on Rumble? And I'm looking at the discovery mechanisms and I'm like, this thing just it's not that good. So I'm not interested in that. Let's see some of the comments. What did Tate end up in jail for? Allegedly human trafficking. That is what he ended up in jail for in Romania. What's up, Bromit? What's up, Samrat? Thank you for being here. And the way he got caught, by the way, is he posted a video of him eating pizza in response to Greta Thunberg I don't want to go through the whole thing, but he was like trying to diss her, and the pizza box had a Romanian address on it. And the Romanian police apparently didn't know he was in Romania, which doesn't make any sense to me, because if you come into a country, and correct me if I'm wrong, like you have to get your passports, like local authorities have to know you're in the country unless you fly private, right? If you fly private, do you avoid the whole check-in process that legally showcases you're in the country? Because if the Romanian police knew you were in the country, they would have arrested you on day one if they were going to arrest you anyway. But if they didn't know you were in the country and you leaked that you were in the country somehow, and that allowed them to arrest you, then I guess that's ultimately how it got done. But nonetheless, he's out of jail now. So that's interesting. Netflix at 284. Again, Netflix, not an interesting company that I would invest in. It is a movie studio, not a tech company. Here's the thing that really convinced me. I think I told you guys this yesterday, but I spent like 3 hours trying to go through Netflix's library when my cousin was here from India. She just left yesterday, trying to find something to watch, and I could find literally nothing. That reinforced my belief that I cannot invest in this company. If it takes me 3 hours to find a piece of content to consume, there's no bull case, man. There's no investment thesis on this company. It's just not there. You don't lose anything posting on Rumble. You should. I don't lose anything. The problem is the opportunity cost of the time, right? If they had a way to take my YouTube content and automatically put it on Rumble, I'm not opposed to that. But the time it takes to put everything manually is the annoying part. All right, let's take a look at Disney and hear a little bit about what they need to do. Now, Avatar brought in $1 billion, looking to get close to $2 billion in sales, which is what they need to break even, allegedly. Maybe that was just marketing by James Cameron. Now, for those that don't know, Bob Iger bought 20th Century Fox for about $73 billion back in 2017 is around that range. And people think he overpaid massively for 20th Century Fox that owns The Simpsons and owns a bunch of movies and all that stuff. That's why Disney Plus was able to launch, because they had all that content from 20th Century. So if Avatar can bring in a healthy amount of revenue, it at least justifies the 20th Century Fox acquisition to an extent. But he has some bigger decisions on his plate, because Disney Plus is not all what it seems to be, in my opinion. And the parks are not producing that much revenue. I mean, Disney is a stock that's trading at 157 times price to free cash flow. It's in a little bit of a tough situation.
Blockbuster sequel Avatar: The Way of the Water crossing $1 billion in ticket sales worldwide, making it one of the highest grossing movies of the year. The film, a win for Disney, but newly reinstated CEO Bob Iger still's got a long road ahead. His stock down now 40% for the year. Investors wondering if he will be able to turn things around in 23 and what he's got to do to do it. Joining us right now is Matt Bellany. He is Puck's founding partner in a newsletter that I read religiously. Matt, it's nice to see you, sir.
Good to see you too.
What do you think the prospects are? I think there were a lot of people very, very excited, obviously internally and externally around Hollywood when it comes to Bob Iger's return. But at the same time, a lot of the strategy that is sort of put the company into this situation was some of the stuff that he started with.
Absolutely. And the honeymoon period is pretty much over. The stock did not maintain that little bit of a pop it got when he came back. And there are going to be some very big decisions that have to happen in 2023. Namely, I think the first thing he's going to do is going to rip up the changes to the structure of Disney that Bob Chapek instituted, putting all of the creative decisions under this distribution arm that kind of took power away from the creative people. That's going to be gone. All of that's gone. He's going to have to probably do some significant cost cutting and reorient this company around building revenue from the streaming services, not just subscribers. And that's a big issue throughout Hollywood right now, but especially at Disney, because Iger priced Disney Plus so low to generate subscribers at the beginning. Now they've got to get revenue.
And again, that was an interesting decision by Disney. I mean, they put themselves in a unique position. I remember I was in college, senior year. By the way, I love senior year of college. It was a great time for me. It was one of those things I get nostalgic about. But I remember I was in my apartment, and I opened up my computer, and Verizon, which I have for my service, was like, "Hey, get 1 year of Disney or get Disney Plus free for life or something," because I still have Disney Plus. Just sign in. I was like, "What? If I sign if you're a Verizon customer, you get Disney Plus free." And I was like, "Okay." And I remember this was 2019 October or November, and I get Disney Plus for free. And now we've had it forever since I was a Verizon customer. So, I mean, those 100 million subscribers that they got to in less than 12 months, which took Netflix like 8 years, it was absolutely artificial. It's like when Jay-Z sold 1 million copies of the Holy Carter Magna Grail album. I might be saying it wrong. Magna Carta Holy Grail. Sprint which I think is merged with T-Mobile now, Sprint bought like a bunch of copies of that album. They put them as the default on the Sprint phones. So like they pumped up the numbers and they subsidized the costs. Subscriber looks great, but it wasn't profitable. I mean, like I wasn't a profitable customer to Disney Plus at all. And that's what Bob Iger is dealing with right now.
But Matt, the two big chess pieces that I think are on the board here are ESPN on one end and Hulu on the other, the buyout of Hulu or perhaps the sale of Hulu. How do you think those things play out? And they're interrelated, given the amount of money it may take to buy out Hulu, if you therefore then don't want an ESPN, for example.
Right. I mean, and these are philosophical questions, because if you sell or spin off ESPN or even ABC and the rest of the linear television channels, you are making a bet that streaming is the future and the Walt Disney Company should not be in the traditional television business any longer. And that's a big decision, because those networks throw off tons of cash that Disney is using to fund its streaming endeavors. And if you get rid of that, eventually that revenue will go away. Now, some would argue the revenue is going to go away anyways because of cord cutting, and that's going to accelerate, as most people think now. So that is a big decision he's going to have to make. And then the Hulu issue is a little bit, I think, less pressing, because they have this option to buy out Comcast's 30% share in 2024. So he could just simply wait on that. But that has really hindered their strategy in how to approach overall streaming. Are they going to consolidate it around one service, perhaps Disney Plus worldwide? Or are they going to go with this bundling strategy that they've been going with, where it's Disney Plus, including Hulu, including ESPN Plus, including Hotstar overseas? And that has been good for overall subscribers, but many people think that they should kind of consolidate the whole thing into one service to really take on Netflix.
Let's take a look at Disney stock. And, you know, when my cousin was here from India, she said that Netflix India has a lot more content than Netflix America. And, you know, that got me thinking, well, why is that the case? And it's likely the case because the licensing agreements are probably different. Like there's like American movies, not just Indian movies in Netflix India, which is ironic because it's not in America. And the other thing is, she was like, the buying Netflix without ads is the equivalent of about $3 a month in America. And so I was like, wait a second. So Netflix is like, they're doing pretty decent in India. And the reason they're doing decent is because they're charging people the equivalent of $3 a month, which is nothing, right, for America, but for like, again, for something with no ads. But in India, it's a lot more because the income disparities are greater. But it can't be profitable. There's no way that's profitable for them in terms of the cost of acquisition of content and the ability to get a customer to profitably not churn eventually for the lifetime value. Like the LTV to CAC does not make any sense on Netflix or Spotify overseas. And we've seen that through their earnings statements. So again, you've got companies that are doing these types of things that are just good for growth, but not good for profitability, which at the end of the day is the job of a business, right? They have to show that these, like, you can only say we're growing for so long until the growth converts to something meaningful. Like Tesla was growing for 10 years until they started showing that their growth could mean something. And that's why they got rewarded from investors. If we look at Disney stock, let's just look at it on the 1 year. Okay. On the 1 year, we've got Disney at high of 180. No, that was 2021. Let's go to early 2022. High of 154. It's down to about 85. So if we do some quick maths right here, 154 divided by 85 is 81%. Is that correct? Oh no, this is, hold on. 84 divided by 151. Sorry, 55.6%. Okay, so we're going at 55.6%. So it's down 55.6% at $84 down from 150. It went to about 120 in summer and ran up to around 98 when Bob Iger was announced coming back. And now it's here at 84. And so the question then becomes, like, what is the next growth sector for something like Walt Disney? Again, trading at probably a little bit below 157 times price to free cash flow, market cap of $156 billion. And it's literally, I mean, at its 52-week low at the 84 level. Price of sales of 1.8. One could argue this is cheap if you're qualitatively valuing the intellectual property that Disney has as a structural factor of its moat The problem, I believe, with valuing the IP that highly when it comes to something like Disney is that content is such a commodity that even Snow White and Mickey Mouse and all this stuff ultimately doesn't matter in the long term. Like, it matters, but it matters relatively weakly. I mean, like, because it matters to build a theme park, but if the theme park's not the, growth sector or the S curve for Disney, which it's not, then, what is truly the value of the IP? I think the value of a content company is how much relevant content can you have every day? And, Disney has ESPN, they have Hotstar, they have Hulu, they have all this stuff, but is it relevant enough, and can it actually compete with some of the big dogs in the space? And if it doesn't, then it's a lot more harder. Amit, Netflix India is amazing. The reason is their copyright law does not protect IP of royalties networks in the West, so literally everything is on there. Netflix just has to pay royalties. Interesting. Okay, so they don't have the same copyright law. That's actually a really good insight as the United States, which makes a lot of sense. So you have everything there, and that's why people get VPNs to watch Netflix in another country. Now it makes more sense because they just have better content there. The rattling on your audio could be your beard rubbing on your AirPods mic. So I'm not using my AirPods mic. I'm using the actual microphone. The reason it's rattling is because of the interface. I have a new interface. I just have to hook it up, and hopefully we can solve some of that rattling that's been here for like a couple months. Jay Schwat, wow, you're still on. Yes, I am still on. Disney at its core is a legacy media business with a bunch of IPs that are on the decline. I agree. Speaking of big tech or tech companies, let's take a look at some of our favorite analysts, Dan Ives and Gene Munster, speaking around how 2022 has been for tech.
One of your next guests says tech could be up roughly 20% this time next year. Let's bring in to discuss Dan Ives, Managing Director of Equity Research at Wedbush, and Gene Munster, Managing Partner at Loop Ventures. Dan, I'll start with you because you're on set. Good to see you, by the way. And you're wearing a blue coat. It's perfect. If I had said to you, IBM was going to be the best performing technology stock this year, you probably would have asked me what was in my coffee besides cream. Are you surprised by just overall how the whole year has played out?
Yeah, it's been a horror show. I mean, it's really been a nightmare on Elm Street.
Horror show's a little light, a little soft.
I mean, take your worst horror show and just keep watching, because really for tech investors, I mean, it's the perfect storm, because ultimately what you've seen with the Fed and risk off assets, and you've seen multiples compress across the board. And now sort of the next leg is a softening in terms of the demand picture globally. And look, what I would say is that I do believe that right now tech stocks are baking in a lot of bad news. And my view, just doing this for decades, I feel like it has overshot. Now we ultimately need to see the decks cleared on numbers for 2023 and have some sort of, what I believe, in terms of fundamentals and sentiment, start to at least rebound in terms of what we're seeing going to next year.
Gene, if we were sitting around having a beer and you said to me, okay, a 4% interest rate hike it's gonna hurt housing, I'd say, okay. It's gonna hurt the auto market, I'd say, yeah, I get it. People borrow a lot of money for cars. And if you said it's gonna bring down Apple or Amazon by 40%, I would have pushed back. Why are these technology stocks suddenly so beholden to interest rates?
It's just the market momentum, the market psychology. I think Dan appropriately talked about it overshooting, but that is the piece that is hard to predict. That doesn't get into some sort of business school model. And that's why I think a lot of people, including myself, have missed this, that kind of the scope of the downturn. Predicting this market is part fundamentals, part first operations of what's happening with interest rates. There's derivative effects, obviously, with what's happening with China and the reopening. But at the third piece, too, is this psychological piece, which brings up the question of when is this downtrend going to end, especially with tech. This negative momentum, this recent downdraft with Apple, I think really spooks people across the board. I agree with the thought. We just need a flush out. We need this moment where everybody says this is really bad. And that's probably where the bottom starts forming.
Do you think that's coming, that there is some, haven't we had the flush?
Well, we haven't. It can get really bad. And I think when it comes to the guidance for the March quarter, I think more broadly across big tech, it's going to be the word that we've been using is messy. And what that means is there's probably going to be some downward revisions. I'm reluctant because we're not macro investors here. I'm reluctant to do the call the bottom here. But my sense is, I have a strong sense that we're going to end 2023. The NASDAQ is going to be higher than it is at the beginning of the year. So I feel good about that. What the timing of that bottom is, I think if you're going to ask me, I just need a guess. What's that best timing? I think it's probably post this earnings. I think the best thing that can happen to the market is because there's this psychological game that's playing. I think the best thing is that these companies can try to put some sort of rails around it and give some negative guidance.
Yeah, and look, I mean, my view, I think a lot of what Gene hits on is super accurate. I ultimately believe right now it's as underowned as I've seen tech going back to 2009. And I think ultimately,
What does that mean, underowned?
what that means, institutionally speaking, tech investors that I've talked to, you know, going back to dot-com bubble and burst, basically own as little tech as I've seen. And really, from a sentiment perspective, it's as bad going back to the days of 2009.
But what the heck happened? It was overowned. Last year, I could have gotten people on this show, but without Brian, it's overowned 12 months ago. Now it's underowned.
Well, I think ultimately, if you look at what the Fed's done with the foot on the pedal in terms of what's happened with rates, you've basically seen, as Gene talked about, a risk-off that I would really call a tidal wave risk-off market. But ultimately, when I look at names like Apple, I look at names like Amazon, you look at names like Microsoft in terms of cloud, I think we sit here a year from now, tech stocks are up 20%.
Yep.
And that's why we don't feel now's the time to throw in the towel.
You know, Gene, the first time I got on TV doing this, first off, I was horrible. Some would say I still am, but it was 1998. The market promptly collapsed 2 years later. Then 2007 rolls around. The market promptly collapsed from 2008 to 2009. And in each of those times, and there's a reason I'm bringing this up, is to be a little more optimistic heading into the new year. In each of those times, it was grim. I mean, people are calling for disaster. And by the way, companies went out of business, hedge funds blew up, and people got crushed, not minimizing it. But if you had put money into some of these big stocks back then, twice, I'm not saying you'd be rich now, but you'd be up. Is this?
That is true. So here's the big question. Is this that moment where if you put some money in, you can make a lot?
That kind of opportunity longer term again?
I think it is. And when I say longer term, I think in the 2000.
Okay, so Gene thinks it is. Let's hear his logic.
2024. And I would just emphasize this piece. We've had this 48% down with FANG this year. Most of that is because of multiple compression on the psychology of the market. Some of it, in the case of Meta, for example, earnings have come down. But I think that the key here is that the fundamentals of these businesses remain solid. And ultimately, these are generational companies. And so I think it is not invest in tech more broadly and you're going to do well over the next 2 years. I think you have to pick your spots. And I think that this is one of those opportunities. Again, I don't think we're at the bottom. I'm not trying to be cute, but I think we're going to have an opportunity. Our fund is 50% in cash. If we thought we're at the bottom, we'd be deploying today. We're waiting for that messy.
You are waiting.
We're waiting for the messy quarter. But I think to your question is, you know, this is where we want to optimize our performance. So that's why we're waiting. But I think if you have that view of 6, 12 months out, I would just point one other piece out there. It's really hard to be positive on tech right now. And you feel like you're missing something. You feel like you're not getting the joke. And
because every dip you've bought into this year, you've gotten your face ripped off.
Correct. And you just don't, it's hard to predict a bottom on it. And so you just don't want to do that. I'm kind of doing the math here real time, Dan. I've never had the conversation with you, but I'm guessing we probably hit the ground running about the same, probably all three of us. I started in the business in kind of the mid 90s. But this does have that same feel as those periods that you
that late 2000, early 01, late 08 feel. I mean, at least to me, but that's just maybe we still have shell shock from that time. Give us an opportunity, Dan. We got to go quickly, but tell us what to buy.
Well, I mean, I would be, in terms of my favorites, Apple continues to be our favorite here in terms of the demand story that I believe holds up. Microsoft continues to be the core way to play the cloud. And I think Palo Alto, in terms of cybersecurity, is a table pounder. Right now, New York City cab drivers bearish on tech. We believe now is ultimately not the time to really get nervous. I think it's sort of steady hands, and we believe tech's up significantly into this next year.
Okay.
He said at the end, New York City cab drivers are bearish on tech, implying that New York City cab drivers don't want to embrace tech, which is why they were against Uber. Well, Uber's stock has been destroyed. So maybe those New York City, it's not good that they didn't embrace Uber, but it's great that they didn't buy Uber stock. Look, Microsoft is the way to play the cloud. He didn't mention Netflix, by the way, which makes sense. Palo Alto Network's a great stock. I don't talk about cybersecurity enough. I need to do more research on that. I think that's also a pretty decent company. I haven't looked into their financials yet. And then Apple. Again, Apple at 120 seems cool because I could think it could go to like 180, but because that's where it used to be. But I've not been bullish on Apple because I'm like, what's their growth curve? I mean, demand holds up for their products, yes, but can they beat consistently hundreds of billions of dollars of revenue per quarter without having something that they can grow on? It's hard for me to be super bullish on that. Obviously, Apple is the best stock in the stock market if you just look at the pure numbers. And I did a podcast the other day with Steve, and we dissected why Apple was the best when we talked about Tesla's valuation. But still, I just don't see the growth. Amidst chat bearish on tech. Yeah, I mean and I don't blame anyone for being bearish on tech. It's just a question of like, here's the thing about tech. You know, when he says New York City cab drivers, they care about they don't care about Uber. They care about their cab. They care about the old way of doing things. I think the fundamental, there's two ways to evaluate this. Is the world going to be more technologically advanced and incorporated over the next 5 years than not? Okay, I think we can all answer. The answer is yes, especially what we're seeing with ChatGPT and AI. If that's happening, what are going to be the companies that are going to be capitalizing on that? I think Palantir is going to be one of the big ones, especially in the AI space, which is why I'm bullish on Palantir. But then from a FANG perspective, which I've already 10-20x'd since 2010 and had their run up, can they do it again? Or at least a 3-4x again? And I think that's the fundamental question. The other thing is like interest rates were zero. Inflation was steady at 2% over the past decade, which is why the Fed didn't have to do that much quantitative tightening, which allowed FANG companies to become the behemoths that they are. And we're seeing the valuation compressions based on macro shifting. Even if tech is evolving and it's going to be incredibly incorporated within our lives in the next 5 years, even more than it is right now, the question is, will interest rates allow tech to get the valuations that they got in the past? And I think those are the questions that need to be understood. PMI data is out. All right, let's look at that. PMI data Fed. If I can't find it, someone can send it to me. Let me actually search. You know, it's interesting. I searched it on Google. You don't get much. Search it on Twitter. You might actually find something better on that. What I was going to show, okay, if someone can send me the link to that, that'd be awesome. And I'll try to find out. What I was going to show, this is real quick, is the, apparently the Trump tax returns are out. The only thing that can stop FANG is Congress. That's true. If they stop Meta from being able to buy stuff, that's not going to be the best for them. I'll look at Jumia in a second, Elena. Trump tax returns are out. And apparently they just got released. The House Democrats forced Congress to release them. And this is his taxes. So 2015, he lost 31 million, paid 641,000. 2016 lost 32 million. 2017 lost 12 million. 2018, Trump made 24 million. 2019, he made 4 million. 2020, he lost 4 million. So he didn't pay that much federal income taxes. It's like less than 2-3%. It just, either you think that's bad or you think that's smart. If you're in the business sense, you're like, that's kind of smart. If you're in the, let's say, more economic justice sense, you would say that is unfair. So it's one or the other. But apparently those tax reports just came out, and it seems like it's a relatively big deal. If I minimize this, you guys see if we do Trump tax reports, they're trending on Twitter right now. So there is a lot of stuff coming out right now. From his tax reports. It seems like he didn't pay a lot, which makes sense. I mean, if some of the business, oh, this is it. This is the official one. Yep. So this is the official one. So here we go. Yeah. So 2020, he lost. So he paid in the past 8 years about 1.3 million in income tax. But now, granted, he's losing money, right? So I think, people forget to understand, if you're losing money, you don't pay income tax because you lost money. So like that's not necessarily that out of the ordinary. That's just kind of how it is. That awkward moment when you pretend to be a billionaire but keep losing money. Yeah, I don't know if Trump's really worth $1 billion, to be honest. Like they say he is, but I'm not sure. Gabe, U.S. Chicago PMI actual 44.9, forecast 40, previous 37.2. Okay, so hold on. I want to pull up this article. PMI U.S. Chicago. Gabe, if you could send it to me, that'd be awesome, so we could pull it up right now. PMI Fed. Doesn't seem like it's the best, though, from the numbers you're pulling up. Let me type in Chicago PMI. Maybe that'll be better. That's so weird. It should be like front page on. Oh, here it is. I got the article. Okay, Chicago PMI rebounds in December, remains in contraction territory. Let's share this article right now. Give me 1 second, guys. It's just loading. Loading, and then we're going to pull it up. Okay, come on. That's so weird. Why is my computer freezing right now? It's like a weird, hold on. Let me pull this up. Okay, give me 1 sec. Okay, here we go. So let me pull this up real quick as well. This will help explain different things. Okay. Here we... Well, I don't know why it's freezing so much, guys. I'm sorry about that. That's being weird. But the PMI is the Purchasing Managers Index, okay? And it's an index that measures the month-over-month change in economic activity within the manufacturing sector. That's sort of the core point of it. So let me share the screen right now from MarketWatch. It's so weird, bro. I bought a brand new computer and it's like freezing. And it's like, it's not supposed to be freezing in these situations. Okay. Chicago Business Barometer, also known as Chicago PMI, rebounded to 44.9 in December from 37.2, which was the lowest reading since 2007, 2008. Wow. So that's actually not horrible. The manufacturing sector is suffering from slow demand due to weak global economy and has worked through the backlog of unfilled orders from the pandemic, which makes sense. The next several months will be challenging for the manufacturing sector. Okay, so if you're bearish, that is good news to you, which is why I think Gabe was excited. The index is produced by the ICM Chicago with MNI. It is released to the subscribers 3 minutes before. Chicago PMI is the last of the regional manufacturing indices before the national ISM data for September is released on Wednesday. So economists expect the ISM factory index to slip to 48.5 from a 30-month low reading of 49 in November. So they're expecting it to go down even more. So, I mean, this makes sense. There's a lot of things that have influenced manufacturing, much less the Ukraine economic crisis or geopolitical crisis that has been going on with a lot of raw materials and supply chains being messed up. But if there are going to be... Now, this is contrary to what Elon is saying. Elon is saying supply chains are great. Manufacturing is great. Commodities are great. And so if things, it's just, there's conflicting data involved. Elon's obviously probably a little biased saying that because he doesn't want the Fed to raise interest rates. But if the PMI is going to be challenging, if manufacturing is going to be challenging overall over the next couple months, it's not like it's new news. I mean, we knew that was going to happen given everything that's going on, but it does conflict with some of the other things that are being said by people. So if it is down, then manufacturing is down, which means less stuff being made, which means possibly people buying less. That might not be a horrible... Yeah, so if manufacturing is down, if that affects supply chains and creation of product, that potentially means less consumption of product. The flip side of that is that means more consumption or more competition for certain products. For example, if the PMI means that not that many people can buy water bottles, and that means there's a lack of supply of water bottles. That means more people are going to want to buy a water bottle if they were going to buy a water bottle, but the lack of supply means that the demand is going to raise, which means the price for a water bottle, i.e. inflation, might go up. So the PMI being bad is not good for inflation, is the conclusion, which is not the best thing. So yes, another feather in the bearish cap. Reason is this is important is because it highlights the weaknesses we are going into. Yeah. Why are people talking about recession like it's new information? Everyone knows it, just having the term. That's a good point, Michael. It's like, yeah, we know things are screwed, but it's still happening. Let's go back into the market and see where stocks are. If Tesla has been okay, if things are all right. Tesla 122. Tesla stayed flat. S&P a flat. So we're gonna end the year. Okay, wait. So let's say we end the year at 380 on the S&P. So we did what, 478 in the top. Let's go to the top right now. Let's see what the end of the year is. 472. I think it was 478, but it's 472. Whatever. We'll divide that by 380, which means we had a 25% decline in the S&P. 25% decline. We're down 20% on the year on the S&P. And that's where we're going to end the year. So if you had bought the S&P at the beginning of the year, you are down 20% on your money. On average, you're supposed to get 5 to 8% back a year. This is one of those years where you are down. Now, it's not a catastrophic year where you're down 50%, but it is down. And so that's where the S&P is ending. Tesla down 70% year to date. Palantir down 60%. I mean, very few stocks have survived 2022. And look at Roku, man, under 40. Goodness gracious. I don't know why people are buying it, but there it is. Roku under $40 right now. And that's how we're seeing to end out the year. There we're going with Roku. Biotech will be good this year in the recession at ADMA. ADMA. I know nothing about this one, Gabe. Market cap of 800 million, price to sales of 5, forward PE 197 million free float, 52-week high, 3 point. Interesting. Okay, I know nothing about them, so we will go deeper into them and check them out a little bit more. See, we got Tesla also at 122. Not bad, because people are still in denial and they can't handle the truth. That's true. Pound your stream tonight. Yep. Okay, so let me end out the stream. A couple things. Let me do some announcements, and then we're done for today. Thank you guys so much. I wanted to go a little bit longer since it was the last stream of the year. So 2 things. SoFi Weekly tonight, 10 p.m. I think we might have a guest on that podcast. We'll see, but it's definitely going to be me, Tevis, and Tanner. I think Riley can't make it. And then Palantir Weekly, it's definitely me. I'm going to make sure Chris can come. If Chris can't come, I'm still going to do it, and I'll just find some guests, and we'll be there. So Palantir Weekly, SoFi Weekly will be tonight, the last 2 ones of 2022. If you're interested in being on one of these podcasts, by the way, just DM me on Twitter at AmitIsInvesting, and you can definitely hop on the podcast. I think we're going to put a StreamYard link in the chat as well, so if anyone wants to hop in, ask questions, anything like that, that's cool to go as well. Last 2 announcements. I believe I will be shaving my beard tomorrow. Okay, we're doing it tomorrow. I think 7 p.m. Mark your calendars. Probably going to be shaving my beard tomorrow. Yeah, I think 7 p.m. I mean, I think that time is going to be good. If anything, it'll be on video if you miss it, so it'll be there. But I think 7 p.m. so you can do all your drinking after 7 p.m. Or maybe it should be earlier. I still don't know, man. I still don't know if we should do it 5 p.m., 6 p.m., 7. I don't know, because I think New Year's Eve, I don't know how many people are going to be able to come up, but let's just see. Let's just live. Yes, we're going to do it live. We're going to do it live. I don't want to do it on Sunday. Everyone's going to be hungover. I want to do it on 31st. Look, I'm just going to bet that more people are home than not, and we'll do it at around 5, 6 p.m. or 6 p.m. and we'll keep it going. So that's that. Final thing I'll say here, last day to invest in my startup is January 13th. Link is in the description, aldia.io. I'm putting out my December results on Twitter literally tomorrow. So please watch out for my Twitter. If you're not following me on Twitter, be there on Twitter. I will put out my results there. We've grown the platform over 350% since August. I am very bullish on 2023. Now, startups are either hit or miss, either 99% chance you lose your money. So whatever you invest, you have to be okay with it's going down the gutter. But if it works, it's one of those things that, 10, 20, 50x is absolutely not out of the question, because you're investing in the early stage of a company. And, when we invest in Palantir, it's $15 billion. The people that invested in the early stage, it was like $20 million. So there's obviously a big multiple there. The link in the description has the pitch deck, the video. I was just on a phone with a subscriber last night. By the way, I was on the phone call with a subscriber last night who watches Palantir Weekly and SoFi Weekly every day with his son. And his son is 12 years old. And it just warmed my heart. He was calling because he was interested in investing in some of this other stuff. And he's from California. And we were talking, and he's like, yeah, me and my little boy, we watch your podcast every Friday. And it made my heart so happy. It made me also realize we can't do any more rated R jokes on that podcast, because we got kids watching at this point. But so that is the last time to invest. All the information is on that link in the description. And if you have any questions, email amit@aldia.io. Aldia.io is in the background. We can hop on a Zoom call in the next couple of days. January 13th is actually the last day. I'm not just saying this to say this. Legally, after that day, it's done. So if you guys are interested, minimum is $100 if you want to invest. We've had people who have invested close to $25,000. Then let me know. If you want to just throw some money at it, it's like, all right, I'm okay if I lose this money. Let's see what happens. That would be the type of investment thesis you have to have, because it's very risky, but it would be a bet on me and a bet on my ability to execute. Okay, that's pretty much it. Tell Chris to stop cursing. Yeah, we got to tell Chris to stop being a bear. He's making people pessimistic at a young age. Thanks, Amit. Happy New Year to you and your family. Happy New Year to you, everybody. I'll be live again tomorrow, but I appreciate everyone who's joined the Market Open 2023. Excited for it. Let's see what we can do. Let's see how we can grow the channel. Let's see how we can you know, see what happens in the market. And personally, let's see how much more value I can give through my content, because I think 2022 was good, but I really want to up the value production on this channel and truly be someone who you guys can rely on when it comes to content, even if it's just entertaining or informative, and keep things going. So thank you guys so much. I appreciate it. It means the absolute world to me. I will see you guys on tomorrow on shaving my beard. Thank you, everybody. Bye-bye.